Well, natural gas falls into the sort of same area as crude oil. Clearly, it's raw materials that are clearly tied to the price, to the performance rather, of the US economy. But natural gas is something that's really taken off in the last couple of years. The shale gas explosion in the US in terms of usage is something that everyone's now talking about, and how the US is going to play that. Reduces its dependence on crude oil and on the Middle East. So in terms of politics and geography, it really is quite interesting. But also in terms of natural gas as a product, certainly, it's something that moves clearly with the performance of the season. So if you have a warm period, natural gas usage will drop off as people look to use more for air conditioning. But in the colder periods, you get more of that use in terms of heating. We've had a long sustained bear market in natural gas, mainly because production has skyrocketed in such a big way. And like any market, you get a lot of people who are saying, well, the price is clearly bound to rise at some point in the near future, and yet it continues to decline. And some people might think this is quite odd, but when you think of the sheer abundance of natural gas off the coast of the US, then that would explain why the price hasn't really performed as well as you think it might at a time of improving US economy. Well, as with crude oil, you can actually just trade natural gas itself through the platform, as with any other commodity and any other asset that IG offers. But also, as with crude oil, you've got the companies that are exploring for natural gas, and a number of those, BG Group being one, large gas interests off the coast of Brazil. And just as with crude oil, you've got companies that aren't directly exploring but are tied to the market providing facilities. The same thing applies really for natural gas. So I think the key is to not just look at the commodity itself, but look at the other factors that affect it, and also the companies that are using natural gas both as a product and as a means of exploring for it. I think like any market, it's too easy to rush into natural gas. You read around the topic a little bit and you decide that you know all there is to know about natural gas. I think it's important to take a step back and really just assess when the most volatile periods are. So as with crude oil, you have data on US gas consumption and also weather data. It may not be the most interesting of data to look at for an investor, but it is worth bearing in mind looking at how cold weather periods and warm weather periods are playing out in the US, which is still the world's major consumer of natural gas. So do bear that in mind. Look for when important economic data comes out from the US and around the world, because clearly if we expect an improving economy, it often means natural gas will go up in price as well. With common mistakes, I think like any other market, maybe not using stops is an obvious one. People think they can use the stops mentally rather than actually placing them on the platform. This leads to, I think, you sort of wait for another event that may turn your trade around if it moves against you. And the temptation is really, it will always come back in my direction, so you sit and wait for it. And of course, inevitably, it doesn't move in the direction you want it to, and you end up taking a bigger loss than you might have done had you used stop losses. And also, I think the key thing is position sizing with natural gas. And the temptation is if you formed an opinion on a market and you think it's going to move in a certain direction, the tendency is to back that all out with a fairly hefty position size. I think the better thing is rather just sort of test the water by putting on a smaller position, waiting to see how that trade works out. If it works out in your favour, then all well and good, and if it moves against you, you won't have lost quite so much. But then if it does move in your favour, you can always add to that trade by placing additional trades on top of it, and so you can reinforce your view once you know the direction of the market. As with almost all our markets, you can have guaranteed stops, so these will protect you completely against any sudden moves in the market. And they do, of course, happen like any other market. Unexpected data or news can cause sharp jumps. And we know how commodity speculators are using this market quite substantially, so do be aware of the volatility that goes with that. So guaranteed stops, whilst they may not be suitable for everyone, but if you're not sure you're entering a period when you think volatility might be on the increase, they will be useful insurance against sudden moves. I think, like most markets actually, it's a mixture. There will be those who are using either fundamentals or just technical analysis, but a lot of people, I think, will look at both. They will look and see how the economic data comes out, how the natural gas figures from the US Energy Department come out, whether they're good or bad. But then they'll look to see, well, how is the price done around this level of late, and what does that mean? Where might it sort of hold the line, where it might bounce off? So I think it's important not to dismiss either fundamental analysis or technical analysis off bat once you're trading, because it's too easy, I think, to get sucked into an opinion. And either fundamental or technicals may provide you with an opinion you hadn't considered to start with. So it does help just to broaden your outlook on a commodity.